Happy Tuesday. Hope everybody's doing well. Happy Halloween. We've got 3 weeks, a little over 3 weeks till Halloween. Can't wait. And it's aptly fitting, I guess. Aptly fitting. I don't know if you call it that. But given that there's a lot of spooky stuff going on right now. The market, politically, and then just sprinkle in a little hurricane action times 2. What the heck? But we're going to talk about, today we're going to talk about the affordability and what's going on with affordability. And is it truly a fairy tale that that we could even have an affordable market again, that an affordable market even exists? And, you know, could that even come back? And so that's the big question mark. So we're going to kind of dig into that and kind of like what the local data is. The jobs market report came out Friday, and how does that, you know, impact anything, and whatnot. So we're going to kind of dig into that. I've got some questions from my last video that I posted last week. A couple of you had a couple great questions, so I'm going to answer those live in detail, and I'm going to answer them with a guest. So I'm going to bring on, I've got a guest that is new to the show. Hey, Kate D, from Michigan. Thanks for jumping on the chat so early. So happy to see you. But I've got a new guest from, also hailing from Jersey. So we love to have Jackie from Jersey on, but it's not Jackie. It's not Jackie. So it's someone else that is equally awesome. And this is the first time on the show. So I'm going to bring her on, stop blabbering about it. I'm going to welcome to the show, my friend, Olga St. Pierre. See if we can get her on the show here. Here we go.
Hey, Jen, how are you?
Good. How are you?
Excellent. Excited to be here. Excited to dig in.
100%. And you, and we were kind of talking about this real briefly. So you are, tell me again the area that you're in.
Majority of New Jersey and Philadelphia and suburbs, because I'm right on the border.
You're right on the border, right? So you're like not north. You're like central, like further south areas.
Exactly.
Very, very, very cool. I'm actually watching. Re-watching for like the third or fourth time The Sopranos. So Jackie and I, because Jackie's up in North Jersey, the Sopranos based out of North Jersey. So she says, "Oh yeah, the bridge that's in The Sopranos." Her husband goes over that bridge every day to work, and so that's kind of cool.
But you know the benefits of where we're at. We were actually in New York City last week, and my girls found a restaurant that was really cool. They made a reservation and they wanted to go in. So on last Wednesday, I had to postpone my live by 1 hour because we went into the city and we actually witnessed a movie set. There was being recorded. Yeah, we almost missed it, but then they had a bunch of cars that were like from the 1930s and 40s, and I'm like, wait a second. God. So yeah, you know what? They didn't give us a name yet, but it was about a set for 1950s table tennis player or something like that. So yeah, it was pretty cool. We actually watched them go say action and cut. So check that out.
I love that era of movies. The 50s, 60s, love it. That's one of my favorite. But hey, I wanted to, before we dig in, I wanted to just kind of reflect on something, the pressing news of the day, which is our dear friends down in the southern states, down in Florida, that are getting hammered again. Hammered again. I mean, it is hurricane season. It is something that is, okay, well, it's not out of the blue. It does happen, but your heart goes out to them. Prayers go out to them. And Christina Smallhorn had recommended an agency that is doing some pretty incredible things. So I wanted to bring that up and just kind of make people aware of it. And I'm going to do a shout out to these folks throughout the live stream so that we can, bring some awareness. And it's the United Cajun Navy, and it's a 501c3. It's a nonprofit group, and they literally, what is on their website says, they're a 501c3 nonprofit. And they offer support for the needs of children all across America. We provide relief efforts through fundraisers, community events, building events, in-depth training, so on and so forth. They're just an incredible organization, and like I said, my good friend Christina has vetted these folks out. I wanted to just bring your attention to, you can scroll down, go to their Facebook page, and on their Facebook page they have updated what's going on with the hurricane. They're based out of Baton Rouge, which is down in Christina Smallhorn's neck of the woods. But on their Facebook page there is a link to an Amazon wish list, and that Amazon wish list, they are collecting everything that you can imagine for donations. So you've got heaters and gloves and crayons for the kids and socks and booties and all kinds of stuff, and you can go on and all this stuff, food, tuna, everything that you would need, that someone that would folks that are struggling after such a huge disaster like that, the things that they'll need. So I'll kind of bring this up again. Olga, can please remind me? my mind sometimes. Actually, did I share this? There we go. I don't think this.
That looks good.
So yeah, they've got all the things. You just click on and add the cart, and it goes right to them, and off to the races. So.
And this is actually very helpful because a lot of people don't know what to do. They don't know what to buy. So this is very easy, and it helps you be part of something to help others.
Yep, absolutely. You can certainly, do a cash donation. They have that. But, a lot of folks, especially, nowadays, like, well, I don't know where the cash is going or whatnot. And I'm sure this is, it's a 501c3. It's vetted out and all the things. But it's kind of nice to say, okay, I'm going to buy socks, children's socks and crayons and, things of that nature. So I just wanted to shine a light on that because I think it's, something positive in the wake of, such terrible tragedy that's going on right now, But we're going to talk about other tragedies, which is the housing market. Clark, the realtor in the house, had Clark on the show last week. Clark, jeez, my brain is, yeah, that's yeah. And if somebody that's going through perimenopause, then you can ask them about that.
Oh, we need to talk later about that.
It's like, wait a minute, what am I doing here? Oh, right, live stream.
Housing market.
Good grief. Charlie Brown, as my grandmother would say. In any event. So we're going to get right into this. And the first article that that talks about the affordability and I wanted to get into first this article that I found on CNN that was talking about how stuck the market is. I want to talk about a little bit about how stuck the market is, kind of like the state of affairs right now, right? Kind of get into like where we're at right now, Olga, in terms of the actual data and so forth. And then we'll get into, I found another article about talking about, whether, what does that even look like? What needs to happen to the market to get it back to an affordable market? What actually, like pragmatically, what needs to happen? So stay tuned. We're gonna dig into that information. But this first article says a new report illustrates just how stuck the housing market is. And actually, see if I can get this a little bigger on the screen. There we go. It says just 2.5% of homes in the U.S. changed hands this year in the first 8 months, the lowest turnover rate in 30 years. Says the latest data from the real estate brokerage underscores just how much the housing market has stalled in 2024 as Americans face a toxic combination of record high home prices and elevated mortgage rates, creating one of the most unaffordable housing markets in a generation. This is not news, right? It goes on to say that the home sales per 1,000 properties in the first 8 months of the year. I mean, it's just, in terms of, what the turnover, the extremely low turnover. What this data tells us, this is Chen Zhao, Redfin's economic research lead. That's how you would say their name, Olga? Chen Zhao. In any event, what this data tells us is that the housing market in 2024 has been really frozen. We have said the same thing in 2023, and I think there was this expectation that it couldn't get any worse. I know I've had those conversations, Olga. Right? But 2024 has been disappointing for the housing market. About 25 of every 1,000 homes were sold between January and August. This means 37% fewer homes were sold between January and August this year during the same period in 2021, which saw a pandemic-induced burst of home buying activity and 31% fewer homes than the same period in 2019. Zhao said a market where 30 to 40 of every 1,000 homes changed hands would signify a healthier housing landscape. Of course, one of the main reasons that fewer people are buying homes now is there are just fewer for sale. That's some serious rocket science right there, Olga. Just 32 out of every 1,000 homes were listed for sale in the first 8 months of the year, the lowest level since at least 2012, the earliest year that Redfin has listing data available. It goes on to say that where you live makes a difference. Now, this I found was very interesting. This is one of the reasons why I wanted to include this article. Some areas have suffered a bigger slowdown than others, and we talk about this every week. Homes in suburban and rural areas changed hands slightly more often than those in urban areas, according to Redfin. Geography also matters. 7 of the 10 metro areas with the lowest turnover levels this year are California. Los Angeles saw the lowest turnover rate of any metro area analyzed by Redfin, with just 15 of every 1,000 homes changing hands, a 32% drop from the same period in 2019. And we're going to actually get into the top 10 slowest in a second here. In a place like LA, wages aren't keeping up with housing prices. Olga, we've been saying this, right? We've been saying this in terms of the unaffordability. One of the things that has, yes, and yeah, interest rates, and yes, home prices. But the thing that, home prices have always increased. The difference is now home prices are outpacing wages. Before, years prior, wages kept up with home prices. So as home prices increased, wages would allow the home buyers to keep up with those increases, but that hasn't happened, right? So it says Jeremiah Vankin's a Los Angeles based realtor with Compass. There is not much that much new construction hitting the inventory hitting the market. When it does, it's not at entry level prices. Big surprise, it's LA. The cost of construction is so high that building and then offering someone something below $1 million is hard to do. That is just crazy. So here are the top 10 with the slowest pace of home sales. These are the, and this was actually a super interesting list because I was not surprised. LA's number 1, okay, followed by Boston. Boston is always done really well, but I will tell you right now, I'm about an hour south of Boston, and this has been probably one of the slowest years I've seen. I've been in real estate since 1996. This has been the slowest I've seen it since the market crashed in 2006. Doesn't mean the market's crashing. It's just we're not seeing inventory come on. We're not seeing the transactions. We're not seeing people buying and selling. Followed by San Francisco, Oakland, Anaheim. You can see a trend here, right? I think we lost. Hold on a second. Did we lose? There we go. I lost you there for a second.
Yes, I'm back. Thank you.
San Francisco. How long were you gone? I'm sorry.
That's okay.
I'm so sorry. I was so focused on the thing. I'm so sorry. I'm a terrible host.
No worries. You know what I wanted to share with you when I was looking at this list a little bit earlier. From what I understand is typically we keep an eye out on California and Florida as some of the bigger states that kind of give us an idea on the trend on when things are about to change. And this is what I think may be happening here. Look how many California housing markets are listed on this list.
Yep.
Could this
Which
be a
would,
sign of something?
what's interesting though, what's super, super interesting, there's a West Coast, East Coast thing going on, right? So typically in a market, typically in terms of real estate, historically, things work from west to east. So when the market drops on the West Coast, typically the East Coast follows. When the market crashed in '06, we felt it, early '07 on the East Coast, right? It takes time, but it usually starts. Buyer agency started on the West Coast, made its way over to the East Coast. We had it about 6 months to a year later. It's kind of, that's the way things happen. And, with the pricing and the trends, typically. What's interesting here though is the slowest home pace. You'll notice these are all like, Austin, Texas is not on this list.
I'm
Florida
surprised.
is not on this list.
Yeah.
Okay. And what's interesting is you've got Boston, Providence, Montgomery County, PA.
That's by me. I'm actually surprised that it's on this list. But
So
you know what I think? I think it also depends on, this is what I always tell people. I said, it depends on your location and it depends on your price point. Where some of the first-time home buyers price point under 500,000 in our area, homes are still multiple offers.
Yeah, no, 100%. And actually Clark brings up a good point. He's, exactly with that. He's, Cali being so high, I can only imagine how slow it is. I think, that fits from what we're seeing here, right? Because Bergen County, New Jersey's been at the top of the list for appreciation, close to the top, right? Right near California, Massachusetts, that whole, that sector, those central areas. And I wonder if they're close behind because they're also the most expensive. Massachusetts is the most expensive state in the country. California, I think it's Massachusetts, Hawaii. It was Hawaii, Massachusetts, California. Actually, it was Hawaii, California, Massachusetts. And then Massachusetts bumped up a notch to second place. And now Massachusetts we're first place. Yay. The most expensive state in the country.
I'll send you the medal. I don't know if you really want the medal for that.
No,
but
don't send a medal, send money. I'll take the money.
But you know what? And I don't remember if it was this article that actually made a good point or another one where they were saying that the increase in housing prices does not correlate with the increase in salary increases.
Yes. Well, and that's exactly what I was, kind of referencing earlier was that, as prices have always increased, right? It wasn't like it was prices in the 1950s, 2 years ago, and now it's 2024. It's a cyclical market. It goes up, it goes down a little bit for an adjustment, and it goes up, and then down a little bit for an adjustment, and then it goes up higher than the highest point is always higher than the last point. And actually, I can pull up that data. Now this as we're talking here, but so it's interesting. I'm going to do price history, home price history. Yeah, I'm going to pull that up because the Federal Reserve has a great chart on that. That illustrates exactly what I'm talking about. But let's see here.
I just find it interesting that this list has big towns. And then there's Montgomery County. Like, how did that come about?
100%.
I go, you're on Fred. Okay.
Yep. So this is 1965. Right. So we got 1965 with the median home sale price, 20,000. Right. And you'll notice that, it goes up and it dips down again, but then it goes up and it goes up to the peak and it dips down a little bit. And it goes up to a peak and it dips down a little bit. And you'll see all these little ups and downs, but guess what? It's a gradual increase. We've got, the 1990s was a rough time. And that one peaked, went down. Can you imagine that was a peak at 126,000 and then it went down 117, but then it went back up again. And you do that succession all the way up. Then you have the crash, right? The financial crash, 2007, which was a big correction. You
Mhm.
know, it was probably we didn't have enough of a correction through here, so there was a lot of well, there was a lot of things happening in the background with, people that
Mhm.
getting mortgages that shouldn't have been getting mortgages, um, and that correction, but then it rebounded. I remember when the market crashed that people said the house prices would never, ever, ever like 257,000 was the median home sale price for the country, for the US. People said the prices will never get that high again. It was ridiculous. They dropped, right? $50,000. Well, then guess what? Here we are. Fast forward 2013, we're back and then some. So the problem is as that progression, as it goes up the scale, year after year, wages have increased along with it. The problem is right here because you'll see the slope of that increase, that gradual increase, and it gets a little bit sharper here, but this increase is 100%, and it doesn't necessarily mean that we need to get back down to here, but if we get down to this area, right? Which I'm going to give you some stats on that in a second. That'll actually illustrate exactly what that would look like to get it back to like a more affordable market. That's why we're here, is because wages haven't been able to keep up with it. Hey, David Matney's in the house. Oh, I lost Olga again. Olga must be having some connectivity issues. Oh, it's okay. I'll keep an eye out for you, Olga, when you jump back in. So I'm going to get on over to dun, 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 this article where it goes on to um, Vankins also attributed the slowdown in LA to a slowdown in hiring in the entertainment industry, one of the city's largest employers. And this definitely had an impact on wages. With the actors' strike, the writers and actors' strike, along with business disruptions caused by streaming services, have dragged down entertainment workers' employment prospects. He says, I see a lot of entertainment workers out of work, and they haven't been working for years. Their money is starting to dry up. So they can't, this is the $1 million starter homes are not sustainable. Boston was the second slowest market and saw nearly a 38% drop in homes changing hands from 5 years ago, which is interesting because we don't have an entertainment sector like LA does. Our industry, the medical field, hospitals, colleges are a big draw, and that hasn't gone down. So it's just interesting. It's a price point issue for sure. But Austin, Texas, which has emerged in the past few years as a major tech hub, saw the largest percentage decrease in home sales over the last 5 years in all 50 major metro areas analyzed by Redfin. The Texas capital recorded 30 sales of every 1,000 homes this year, just about half of the 2019 rate. Let's see here. Check the chat here. Sam Scott Kim, hey, welcome. I'm glad to see you first. Hey, Jen, first timer. Awesome, awesome. Someone else checking in from Ohio. Say S Street. I'm going to call you S Street. There we go. Thanks for jumping on. You guys, whatever you have any questions, pop them in the chat. Or if you just want to blat out whatever your stream of consciousness is, go right ahead. The article goes on to say home buyers in the Sunbelt cities and areas within commuting distance to New York City had the biggest pool options. More homes changed hands in Phoenix than any other metro area. So here, this was the top cities with the slowest pace. Here are the cities that are booming. So we've got top of the list, Phoenix, Arizona, 38 out of 1,000. Newark, New Jersey, still just pumping along there. Nashville, Tennessee, Tampa, Florida, which is super interesting. Tampa, Florida, which, with everything that's going on with HOAs and homeowners insurance, and I've done a couple of videos about, talking about what's happening in Florida and specifically, and the challenges of living there and how unaffordable it has become. It's has the fastest pace of home sales, which is interesting, which is really interesting. Yes, people moving out, but you have to have people moving in in order to move out for the home sales. So it's just very interesting. Nassau County, New York, St. Louis, Missouri, Austin, Texas, Denver, Colorado. Yeah, Austin has had a big turnaround. My friend Angie Ufamata, who has been on this live stream, I know she's seen a lot of activity in her area in Austin, Denver, Colorado, Jacksonville, Florida, another Florida city, and then Detroit, Michigan. All 10 cities with the fastest pace, which is very interesting. Let's see here. Just checking the chat here. Sam Scott Kim in Tampa, Florida, Hurricane Milton news is depressing. Yes. And you know what? For those that are just jumping on, I kind of mentioned this earlier. In the live stream, I'm going to be kind of jumping back to this every now and then. There is a great organization, a 501c3 organization called the United Cajun Army. They do some pretty amazing things with, they're literally swooping in to help people, providing donations, providing help. And they have their website, which I'll include in the description. They have a Facebook page, and on the Facebook page, they have set up an Amazon wish list. Now, they are based out of Baton Rouge. My friend Christina Smallhorn has vetted these folks out. As I know, there's a lot of, opportunity seekers, that will disguise themselves as, 501c3s and they're really just opportunists. And this is not the case, to the best of Christina's knowledge, it's not the case. She knows these folks and they're doing some pretty great work. So if you want to help out, you can click on the link, and they've got, the Amazon page. If you want to buy something, you can donate. They do a lot of stuff for the kids. So they've got baby socks and gloves and crayons and coloring books and cans of tuna, all the things. But if you want to just send them a donation, a cash donation, they've got a button too. So I just wanted to bring that up. I'll be mentioning that throughout the live stream because I think it's just, to help these folks out for sure. They need as much help as they can. Let's see here. Let's see. Yes, Dave, Matt. Stay safe. Stay safe. Oh gosh. Thank you for being here. Thank you. Yes, David, we are glad you are safe. 100%. Helene Robinson, welcome. Do you see smaller construction homes being built? I'm in the foothills of North Carolina, 30 years. Would love to downsize, but nothing here. First time for me here too. Hey, welcome. And you know what's funny is I actually, I had an article about that. And you know what? I'm going to try to pull that up because I had, here it is. So I'm so glad you asked that. So I'm going to jump off this article for a second to answer your question because I found this article just last week. And here's my guest. What happened?
The technology is just not cooperating today.
You know what? That's because we're talking smack about your area being slow in sales. So the internet companies are like, nope, not today. But Helene had asked about smaller, to get you caught up here, Olga. So this question came up by Helene. She said, do you see smaller construction homes being built? I'm in the foothills of North Carolina. I have 30 years, would love to downsize, but nothing here. And so I actually came across an article that I bookmarked, and I'm glad I did because it addresses exactly that. This popped up last week. It was by Realtor.com, and it says housing market shrinkflation. Why homes are getting smaller, but you'll pay the same price. And this is what's happening: is that you can get smaller homes, but you're not necessarily going to pay the same amount of money. How much smaller are new construction homes today? It says, as proof, look no further than D.R. Horton. Let's see if we can get this little here. let's see. The median square footage for new construction fell from 2,098 in 2022 to 2,036. Oh boy, Olga, in a big old 60 square feet.
Can't move in now. It's too small.
That's a walk-in closet. In 2023, according to Parcel Labs, an analytics firm that specializes in housing market data, that's 3% year-over-year decline, marks the biggest single-year dip in the past decade. So it doesn't seem like a lot, but it's actually a pretty big decrease, especially when home builders are typically going larger. And I've heard this conversation a lot by folks, previous streams and whatnot. People say, well, why are they building these McMansions? Builders are they just want more money. And of course they're trying to, it's hard for a builder to make those numbers work, with the cost of land and all the bureaucracy behind home building, getting lots approved, and all the red tape that's involved costs money. When they have to go to the town hall 14 times, it costs money every time they go, for permits and special, options and special approvals and all these things. So they've got to make it up somehow. And the best way to make it up is you do, the bigger home you build, the bigger the margin. But interestingly,
they appeal to the majority of the people. They do research. They figure out who is the target audience and what are they looking for. And also new construction very much depends on the area that you're in, right? So we also vacation quite often in Florida, in the central part around Disney. And we visited plenty of new construction just because I'm interested. I want to know what other states have and what is happening there. And because there was an actual new community that was built right behind where we were staying. So we went in. So this is going back to probably a couple of years when it was really hot and things were just flying off. And you should have seen them. They were built this close to each other. They were all cookie cutters stacked up. It was a huge community with a pool and a huge entertainment area in the front, lots of activities and slides and this and that, right? And a lot of those homes were 6 and 7 bedrooms. Right, because the idea was that those people were building those homes because they were short-term rental approved.
Yes.
Right? So that, we're all going for $800,000 and $900,000, which is, I'm not even talking about trying to figure out how you can rent enough and compete with everybody else around you and make money at that per hour. So that is a different type of new construction, but. To add back to the point of smaller homes, specifically because, my main focus is actually baby boomers. I am a senior living specialist, and this is very much of interest to me. Not many builders are focusing on that population, and that is going to become an issue in a couple of years. And they do want smaller homes, and they want homes that are one story, and nobody's building those.
Yep. Well, what's interesting is that I wonder, based on the fact that, just on your point about builders building what is the demand, right? And growing families and so forth. But with 75 million baby boomers that own homes in this country, and a large majority of them are not going into assisted living, they're downsizing their homes, which means the demand for smaller homes for that segment is increasing. On the heels of that, the younger generation that's coming in, I read another article the other day that said that the demands of the millennials are gearing towards more minimalistic, I would probably say, and not minimal homes, but smaller homes. They're not looking to, start a family right away. They're not looking to, get into the 2,500 square foot home. They want something that is affordable, and affordable means smaller. Smaller means less money, typically. So I think that on, to bookend that, you've got, you do have the generation in the middle that is a whole different story. The Gen Xers, where the needs are much different. They're actually looking for larger homes because maybe they're going to be bringing in some of their parents, and maybe they have adult children. That's me, that are not moving out, right? Because can't afford to yet. But I wonder if those needs will be addressed, like Helene says, but this is interesting because, the fact that you can see the progression since 2013, the last 10 years, it's not, ginormous, but it is something to,
It's interesting. It's
it's
interesting to
interesting.
know.
You've got a small tick up here, a small increase from 2013 to 2014, where the homes, were a little larger, but then it's been, a gradual, even during, the prime building season, the prime market, when the market went absolutely bonkers. Homes are still getting smaller, but you'll notice that this is what they're talking about, the difference jumping from year to year. This is a bigger jump. So thank you for asking that question. That was a great question. 100%. All right. We're going to get caught back up here from what we were talking about, from when the interwebs kicked you out.
Yeah, let's do that.
So just to wrap up, we've got the top states. I think that we're talking about that in terms of like Newark, New Jersey is one of the top cities, fastest growing cities, which is interesting. All over the country, though.
It's bizarre.
It's very bizarre. The top 10 cities they're all over the place, whereas the top 10 slowest are bookend on the coast. These are all over the country, which is very interesting, including the two Florida cities,
right.
Which where you hear all the things that happening with HOAs and insurance and so forth. The article just goes on to say that reviving a stagnant market, housing market, mortgage rates have steadily fallen in anticipation of further interest cuts from the Fed. I'm going to get into that in a second. With the average 30-year fixed mortgage rate dropping 6.08% in the week ending September 26th, they've rebounded some. While that's a significant decrease from the peak, it's still higher than the average mortgage rate in the nearly 14 years between 2008 and 2022. And then that has, of course, contributed to the lock-in effect, people getting into their locking into a low rate, not wanting to move. It says about 60% of the 50 million active mortgages have interest rates below 4%.
And you know what, too? The people are not moving because they don't have the pain point they need to move. Until somebody loses their job.
To move. They can't afford to move, right? Like the money's not there to be, being able to afford just, groceries, necessities. They don't have the money to get into another home and have a bump up in their mortgage payment. Even to get into a smaller house, they'd probably pay more money. You know what I'm saying? But anyways, I'm sorry. I cut you off. I apologize.
No, that's what I was going to say, that there is no pain point for them. There's no need for now. And that if there's no need, there's nothing to be painful about, then they're not going to move.
Correct. And you know what? I will agree with you in the sense that people, if there's a strong pain point, there's a strong reason. Divorce, death,
sure,
relocation.
You
get a job that's a halfway across the country. It's an improvement. You're living in Massachusetts, most expensive state. You get relocated to another state, Ohio. Ohio is like the least expensive, most affordable place to live right now.
Exactly.
Okay. And you have this opportunity. Yes, you're going to lose your rate, but guess what? This is something you're not going to not do it. You're not going to make that jump, because of this opportunity, So that's why the market never stops. I'm gonna get caught up on the chat here real quick. Clark says the acreage is definitely getting smaller with the new construction homes from what I've seen. What's interesting, Clark, is what we see here is an interesting, phenomenon. I don't know if you call it a phenomenon. It's like that old like Sesame Street phenomenon. Sorry.
Yeah, we got you.
Anywho, I digress. So it's an interesting phenomenon that they are looking at. Like you're going to see more like zero lot lines, where you get like approval to literally build up to the lot line. We're seeing attached single families, communities that they look from the outside like townhomes, but they're all single family homes. So the homeowners are responsible for exterior upkeep and so forth, but the lot's tiny because it's attached.
So close.
You see like the lots in Texas that are postage stamp. I mean, if they don't have a fence between the lots, like, hello neighbors, what's for dinner?
See, this is not a cup of tea for everybody.
No, it wouldn't be my cup of tea. But that's also because I grew up I always had a yard. I always had a yard. I always
Remember
had
that show, what is it? Tim Allen, Home Improvement?
Oh.
You know what I'm talking about? No, but the neighbor goes up above the fence line and says, so what's happening? Yes.
His name is guys, help me out in the chat. What was his name? The guy with the fence on the Home Improvement show.
Tim Allen.
It's not. It's on the. What was the character's name? I know you guys know this. I know you guys know. Somebody Google it real quick. But yeah, 100%.
That's what I thought about when you said that there's no yard or there's just a fence.
Wilson, I think. Wasn't that Wilson?
Sounds about right. Yeah.
Yep, 100%. But it's true, and I think that it's just how they, builders have to. It's how they can make money, and try to provide as much housing as possible.
Mm-hmm. It also depends on if you are in some of more rural areas, Midwest, that has more land, period, or Texas. Yep. But if you're getting closer to the coastline and you are in suburbs like New York and Philly, there is not much land to build on. So if they do find something, the goal for the builder is to put in as much homes as possible in that small piece of land. So land becomes a rarity.
100%. David says we are starting to see more variety with new construction. Raw homes, a little bit more available. That is encouraging. And Carr says, yes, people are being locked in because of affordability. Sam Scott Kim says, I'm looking at a tiny home. Ooh, cool. In Jackson, Missouri. Is that Missouri? That's Missouri, right?
So, yeah.
This is my geography. That was not a strong subject for me in high school. It says, don't need a huge place anymore in my 50s and retired last year. That is, you know what? I envy you. I mean, it just, that's, especially now, the tiny homes that are being constructed, I think some of them are being over-engineered to a certain degree, but they're being constructed in a way that is highly efficient. You don't really need, especially if you are single, you don't need all the space. It's all the upkeep. Simplify your life and make it more about experiences. Make it more about, enjoying the things outside your home, as opposed to maintaining. I mean, I'll be honest, the house I'm in is not huge, but if I'm not working, I'm working on the house.
Mm-hmm.
Lawn, repairs, all the things.
There's always something. Your list is long. Yes.
Yeah, and then I'm single, so it's the kids help me out when they can and all the things. But it's once the kids are on their 2 feet now, and whatnot, I'm gonna be looking at a small house for sure.
What's your square footage of your house?
Oh, it's only like 1,800 square feet.
1,800, yeah.
Yeah, but I don't desire, like, it would be nice to have some of a master bedroom and things of that nature, but I just don't desire I have 4 bedrooms. I have 2 kids.
Mm-hmm.
If I had like 10 kids or 5 kids or something like that, I mean, but I grew up in a 1,400 square foot house with 5 kids.
Well, people had very different perspectives and expectations. Some of the older generations, where it was okay for kids to have bunk bed in one room, because if you had 4 kids, you grew up in a 1,400 square foot home, and that was it. That was the norm.
Yep.
Right. Today, I have a 4-bedroom house that's listed that is almost 2,500 square feet, and I had an agent give me feedback. she was lovely. Everything was great. They were actually relocating up to our area from one of the Carolinas. And she was saying, yeah, the house is a little too tight for them. It has a full basement too that you can easily finish. And I'm like, well, what do you mean too tight? It's a traditional colonial, 4 bedrooms, 2 full bathrooms, powder room, family room, living room, dining room, right?
How many kids do they have?
And I said, that's what I asked her. I was like, well, what's their situation? She's like, oh, well, they have 2 kids and then the third one on the way. And I'm like, okay, just very different. That generation has a very different understanding of what is the allowable space that they want to have.
Yeah, I think that, I mean, the needs have definitely changed, right? In terms of, privacy and space. But to your point, like, you know what? I didn't have my own room until two years ago when I got divorced.
Okay, I'm like, wasn't sure where you were going with that.
2 years ago, I had, well, I should, yeah, because when I was born, my first year, my first 12 months of my life, I lived in a 1-room apartment with my parents in Germany. My bed was a drawer, a dresser drawer.
Yep.
And then we moved back to the States. My dad was in the service. We moved back to the States, and then my sister was born. And then I shared a room with my sister until I moved out, and then moved in with my to-be husband, and we shared a room until we got divorced. So when he got divorced, I'm like,
yeah, I lived with my sister, and
feels like I can be like, this is my own space. I don't have anyone else's dirty laundry on the floor. I don't have anybody else's stuff on my bureaus. Nothing. It's like, wow, but it's like, you know what? I wasn't, it is what it is. You just like, I don't know, but it's a different time. So,
for sure.
Very, very, very different time. Oh yes. So yes, going back to Home Improvement.
Oh, yes.
He only had 2 lines every episode. Yes, yeah, 100%. And he was like the best character ever.
And he was always wearing a hat, remember?
Mm-hmm.
Because you can literally see. That's a cool job. 2 lines, you don't have to memorize anything else, and you just periodically show up.
That sitcom. That sitcom was mad popular. Hugh Nugent, welcome to live stream. They ask, what's the average lot square footage that you see for a new single family? Well, that's a tough question to answer because it really depends. I mean, I would say that it depends. Depends on where you're at. It could be anywhere. It also depends on what the lot requirements are for each county. So Plymouth requires technically an acre, but there's all kinds of grandfathering that can happen. And that's one of the reasons why a lot of these builders are getting into the attached single families, because guess what? You get more units on a smaller lot. You can get more units on that one lot. But it really depends. I don't think that there's an average. I don't know. What do you think? Because across the country,
I can think of one community in New Jersey that is newer, that is in like central part of the state, where the lot sizes are all 3 acres.
Mm-hmm.
And that was the requirement and the minimum, because I had a client say, oh, maybe we can buy one of those and we can subdivide the lot. And I'm like, no, you can't, because for that particular township, for that particular neighborhood, that is what the lot sizes are. But that's not the norm, because it also depends on where you are. In Texas, maybe it is the norm to have a minimum of 1/2 acre to 1 acre lot. But in our area, that's very rare to see, unless you go out away from Philadelphia, away from the burbs, as we call them. Then you may have more land.
Gotcha. Sam says, give me a pond, lake, or tennis court. I'm looking. Amen. That sounds like
tennis court or pickleball or both.
You gotta be careful about that. I watched a video about that. You gotta be careful about the tennis courts, especially the ones that aren't being used. Clark says, I wonder how tiny homes will appreciate in the future. The tiny homes being built down here in Metro Atlanta area are starting at $200K plus for 600 square feet. But I am a minimalist, so I don't know. So, I think that tiny homes are an interesting phenomenon because of the fact that most of the time, the tiny homes, you don't own the land. I mean, it depends. You have tiny homes that you own the land. If you
Mhm.
buy a parcel of land and you own that land, and then you put the tiny home on said land, now you own both the tiny home and the land. But a lot of, there are situations that people will lease land from an owner to put a
Mhm.
tiny home on. Or I have a friend that actually had a pretty large lot and they bought a tiny home for their mother. And the mother sold their home, moved into the tiny home,
Yes.
lives in her own place, but also is there because they have 3 kids. So still part of the family, but she's got her own space. So does that appreciate the same? No. I don't know how you does that get assumed by that property? So now it's more like an ADU
Yes.
than
Yeah.
I would assume so. But it'll be interesting to see, because I'll tell you, Clark, there's going to be a lot of stuff. I've been talking about this, and I don't, I can't see it not happening. But you have the tiny homes, but then you have different technologies like 3D built
Mhm.
homes that are built out of cement. Basically take a 3D printer on steroids and have it be a cement extruder, and you build a home out of cement, and a fraction of the time as a stick built home. I'm surprised they're not doing that down in Florida. Be significantly better and hold up better to the weather than a traditional stick built home. Maybe that'll be happening. Maybe we'll see more of that.
What about container homes? But too, right? Because they're
Yeah.
pretty easy to build. And you also brought up a good point about ADUs. That was some of the research that I was doing, because I think that they will become more desirable and needed, especially as the baby boomer generation ages even more.
Yep.
And that could be one big solution to the affordability and to the housing crisis where there is no inventory. If the local municipalities would allow people to be able to add a tiny home or a ADU on their property, to be able to have it for a family, for someone who is a parent or a widower or someone of that nature, that is something that I think California has started that. And they have seen a boom and really good things that were happening because they have eased those restrictions. And I really hope that other states would also follow.
Yep. 100%. 100%. Croy says, I'd rather have the small yard. Do you think you want the big yard till it's time to do yard work?
Agreed. Because then you need
Nope.
a riding lawnmower. That's a couple
Whoa.
$1,000, right? And then
Yeah.
you spend a couple hours on it, and then then you need a fence, and then it just adds on and on and on.
I got rid of the riding lawnmower. I says, you know what? I don't get any exercise these days. The only exercise I get is my lawnmower, and it's self propelled.
Mm,
So I bought an electric lawnmower. So that's my exercise for the week.
there you there you
It's like,
go.
but it's also a mental break. Actually, I don't mind mowing the lawn. The time factor, sometimes but you can't talk on the phone. You can't take phone calls. You can't
Right.
pay bills. You can't, and this is mom's time. I'm just mowing the lawn and in my own head. And it's very like reset, and
How
not
big
to
is
mention
your
super,
how big
super,
is your lot?
half acre.
Half
Uh,
acre? Okay.
yeah, it's not big. It's not huge. It takes me a couple hours to mow it, but
That's your
it
meditation recharge
it
time.
is, and
It
it's very
is.
satisfying.
I
It's
agree.
very, very satisfying to
Mhm.
go long grass to nice short, trimmed grass and all the edging and all the things, and it's just very like, yeah.
And the smell of fresh grass,
Mm.
they could just bottle
Yep.
it.
Patrick and BJ talk real estate. Welcome. So when will the housing market be affordable again? Yes, when you sacrifice location or affordability. Yeah, it's, you know what? And actually, I want to jump into some of this content that I brought in. I'm just going to go down the chat real quick. Yeah, and actually, Hugh Nugent asks, do you think median home prices will hold up in 2025? I'm going to jump in that right now. So I want to get back to this. A couple things that I wanted to hit on, Olga,
Mhm.
is first off, in terms of the inventory, okay,
Mhm.
because there are, significant, points on how the market does what it does, right? You've got inventory, you've got interest rates, you've got wages, the overall health of the economy, in terms of what's actually happening with the consumer. Can they afford said mortgage regardless of what the interest rate is? So those those points, as we watch them, one of the things that we've been talking about, feel like ad nauseum for a couple of years, is the state of the inventory. And this is just since May of 2020, right? When the housing market just went ballistic, and we could see, it coming down, and decidedly, like, you've got a low point of April 2021, then it shot up, and then the lowest point was February 2022 was when it was.
This is like true roller coaster, isn't it? It's amazing.
It's a roller coaster of scariness, which is what we're doing here in October. It shot up. We had a moment of like, oh, maybe things are getting better. October, no, wrong answer. March of last year. And then we thought, remember last year, we're like, oh, market's coming back on the, inventory's coming back in the market. And then we hit November, and November is always a seasonal downturn. But the thing is that we thought that it would be on the incline a lot faster. And but the bottom line is this trajectory, you see how long this trajectory is? This is a good sign. It has, you see, like here, right here, July is a little bit of a it's, it curved just a tad bit. It's not as strong as it was in months prior. I think we're going to see that maybe, continue. We'll see, coming into the next 4 weeks with what's happening with the, November 5th.
Yeah.
So we get on the other side of that. And then interest rates. So this is interesting. I just wanted to, from a standpoint of, what's happening overall in interest rates. This is, since 1980. All right. We can see where it was at the very height. But if we shrink this down to, we go, it's at, if we go back out to 1980, we can see where we're at the height, 18%. But, yeah. I mean, look at those spikes, which is just kind of crazy, but different times, right? Different affordability index, different wages kept up with home prices. So it's not really comparable. But if we look at like over the last, 12 months or so, thereabouts, we can kind of see we've had a steady drop, which is good. We've had since April. They did shoot up a bit.
Yeah.
But that's the ebb and flow of the market. The thing is that a lot of people think that when the Fed makes an adjustment, it's a direct relation to the interest rates, the mortgage rates, and it's not.
It's not 100%.
Because the Fed drops the Fed rate 50 basis points, 0.5%. That is not translated directly to the mortgage rate.
And people expected the change the next day. Like people started calling me and say, Olga, good news. I said, I heard about the change. I said, but don't get your hope just yet. Let's just wait and see.
No, but I do think that there is, and I've got some predictions here for next year too. I do think that stuff is coming. I do think that that this change is coming. I think it will dip down. I think we will see. I'm optimistic. The way things are going overall with inflation, with the job market, which we're going to jump into next, the jobs report that came out on Friday, real quick. It's encouraging. If inventory continues to go up, if unemployment continues to drop, if jobs continue to be created, and interest rates adjust downward, then that's the recipe. That's how we get there, right? That's how we get to better affordability. This was just, and I don't want to get too much in the weeds on this because this is, to be honest, not my wheelhouse in terms of getting into the nitty gritty of the jobs market report. But I wanted to bring it up because I think it's significant in relation to the health of the U.S. economy, right? Because we talk a lot, people, hear, we talk about, the interest rate, we talk about the inventory, but that's like an incomplete sentence, right? Because if people don't have the money, it doesn't matter how low the rate is. It doesn't matter how much inventory there is. If they don't
There's
have,
no job, there's
there's
no
no money.
mortgage, there's no house.
Exactly. So
Right.
the good news is that the jobs report, again, when I get into I'm not going to get into the weeds on this, significantly. Somebody much smarter than I am would have to do that, to get into the more nitty gritty. But the thing that I wanted to just kind of point out on this is that the key takeaways on that jobs report is that it was better than they expected, which is good. They added 200. They said the U.S. economy added 254,000 jobs in September, which exceeded the expectations. They were expecting 142,000, and it was 254,000.
That's like doubling the expectations. That's
yeah. Yes. So it was really good, and then the July and August jobs report were also revised higher. So now I'm gonna do devil's advocate here, Olga, and I'm gonna say it's an election year. Could put my tinfoil hat on. Could these numbers be altered to favor certain parties?
Well, it looks good for optics. So I think a lot of the things that they're doing is because we have elections coming up in a few weeks.
Yep. So, I mean, is it all that? I don't think so, but could it potentially have some wiggle room and to make it look one way or another? Do you see what I'm saying? But I think it's like you don't look at the nitty gritty, pull way back and say, well, how does that overall state of the jobs market, from a bigger picture? But I mean, from the onset, they added more jobs and the unemployment rate fell.
Yes, that's a good news.
Unemployment rate fell to 4.1% from 4.2. Not huge, but it's in the positive direction. And then wage growth rose by a firm 0.4% month over month and 4% year over year.
There's your standard cost of living adjustment, just about about there, right?
It's going to take a while. So I wanted to get into to answer the questions that came up. In terms of the first question that what about housing affordability? When when is that going to happen? Is it going to be a fairy tale or what the story is? So this article, and I apologize, I don't like the on the live stream, the dark, but this is a Microsoft website, and hopefully I think it'll come through okay. But it says home prices need to fall by this much to make housing affordable again. And they actually, so I can get to it here, it says home prices continue to hit all-time highs. I don't need to read all this. We've already talked about this. Sign of unhealthy market begs for price correction. It says a healthy housing market is a more active one where people want to move. Hello, that's not rocket science. It says for that to happen, this is the thing that I wanted to point out. For that to happen, home prices, and this is based on the median home price right now of $383,000. Home prices would need to fall by as much as $121,000 for housing to be more affordable again. That's unlikely to happen in the near future. That's a lot of money.
Yeah.
That's a 30% decrease. Right now, median priced home is about $383,000. So the U.S. housing market has changed dramatically over the last 5 years. As we know, during the pandemic, it ran into a frenzied pace of intense buying and selling, but then slowed to a limp across 2023, so on and so forth. So what's it going to take? $121,000, 30%. I don't see that happening. So
too big of a jump. Too big.
It's too big of a jump. It's much too big of a jump. I mean, the forecast, and I'm going to actually let's see here. Get to this other. This is that other article that I wanted to jump to. This was a Business Insider. It says, it says, so that leads us to the question, is it true that it'll never be a good time to buy? That's really the bottom line question. I mean, who cares about affordability if, just the generalized question? It's like, when can I get a house? am I going to get, will I ever get a house? Will I ever be able to get a house? Right. You know, you go on all these, all these details about what, you know, is involved in the affordability. And it says there's a lot of pessimism around home buying that's led many would-be buyers to resign themselves to a life of renting. I actually am releasing a video about this Thursday about home buyers, home sellers selling and giving up and just going to renting instead, which is very, I went down the rabbit hole in the research. It was very interesting, very eye-opening. While buying a home is certainly much more expensive than it has been in the past, there are still opportunities for people to become homeowners, especially with how many first-time homebuyer mortgages and down payment assistance programs have become available in recent years. It is now possible to get a mortgage with just 1% down and use your payment and closing cost assistance to limit the amount of cash you need to purchase a home. So it says, additionally, home prices are unlikely to drop significantly. You know, although mortgage rates should, the lower the mortgage rate, obviously, the more you can afford to borrow. Olga, that scares me, to get a house with 1% down. That means
that's what I'm trying to think. I'm like, I have never seen it in my area. And
well, I have, but that puts them in a very, very, very precarious.
Well, this is talking about, this is the problem that we ran into back in the crash of 2007, 2008. As soon as the market started to go down, majority of the people got underwater because they didn't put a lot of money down. And this is what this is.
Yep, 100%.
What kind of mortgage is this? 1% down?
Yeah. No. Well, they're using it, you know, they're talking about using programs to help with down payment assistance and closing cost assistance, and which would allow you to only come up with 1% of the purchase price to purchase the property.
Got it.
So that would help. So you ultimately are probably not buying the property. You probably if you have some down payment assistance, you probably have a little bit more in the total down payment, but it's money that you wouldn't necessarily have to come up with out of pocket. And that's, you know, in terms of and that's great for the first time home buyer, but how does that affect someone who wants to sell and buy? You know, that's the big thing. I'm going to get into the,
but you know what they don't talk about is, I don't know about your area, Jen, what those programs are, but if they're talking about the programs that are sponsored by the state, or some of them are sponsored by the counties, like here in PA, New Jersey, a lot of the times this assistance comes as a second loan that gets attached to the house. Mm-hmm. That's one. Two, sometimes the rates are a bit higher. And if you don't stay in your home for the amount of time that is required, which typically can be anywhere between 5 and 10 years, you have to pay that money back.
Right.
So there's a little asterisk that needs to be next to that information, and it's not there.
Yeah, I 100%. 100%. It goes on to say, like, you know, is it a good time to buy a house now? You know, what home sellers should know about the current housing market. It says many would-be home sellers who are holding on to historically low mortgage rates have refrained from listing their homes this year since rates have been so high. But as mortgage rates trend down, giving up their current mortgage won't be as big of a deal. If you're considering selling, conditions may be better in 2025. And I think that's the big thing that I've been seeing, is that the condition, you know, going into 2025, the appreciation is not going to be as much. Interest rates are predicted to come down a little further. So the combination of those two measures, if you're looking to sell and then buy another property, might allow you to get, you know, to make that jump with minimal pain, I guess, in that respect.
Also, the results of the election are going to come down. Things are going to calm down, and people are going to go back to their normal everyday activities.
Just like, you know what? Can we just get to boring again? I just want boring political landscape. I want ho-hum, okay, normal stuff that you complain about. You know, it's just like all this unprecedented stuff, all this sensationalism and all this stuff. Mm-hmm. I'm over it. I'm ready to get back to boring. Oh my goodness. I'm just monitoring the chat. We got some great conversations going on within the chat. So, which I love. I'm letting you guys have that conversation. In Florida, mortgage assistance loans, Sam Scott. Kim
Yeah.
says in Florida, mortgage assistant loans are forgiven if you buy and stay there for 5 years.
But you know what? Here's the other thing, and maybe Sam Scott can also chime in about that. If you go in, because this is what they're also not talking about, right? And what we're saying to people is say, listen, if you want to buy, don't be attached to the interest rate because you can refinance, right? Yep. But with those assistance programs, if you're going to refinance and you have those assistance loans there, if you refinance, you still have to pay the money back.
Right. Right.
You really need to understand how those programs work and really understand and say, listen, and if you tell me, hey, Olga, Jen, I'm not planning on moving. This is going to be my forever home. By all means, this is an amazing program because it's going to help you, but you just need to understand all the nuances of how it works.
Correct.
Yes.
Yeah, I mean, that goes along the lines of like the USDA programs and, those programs that are, helpful, but you have to go into it with your eyes wide open.
100%.
Because, some of those you think that it's free money. It's not really free money.
How often do you get free money? Really?
When you win the lottery?
No, you got to pay taxes on it still.
Lottery. Well, it's, it costs you a couple bucks, but that's yeah, I guess you pay taxes, but the rest of the money that's not, that's above and beyond the taxes is free.
Yeah, sure.
And I guess, I don't know.
How many people win the lotry?
What is that? You have a chance of finding $100 bill in the sidewalk, I think.
Right, exactly.
Clark says some DPA programs are forgivable, and yes, like Olden Jen said, if you refi, sell, or no longer occupy, you'll have to pay it back. Yeah, so a lot of those low interest programs, subsidized programs where you can get into a home for a subsidized rate will, and typically this is historically been like for first-time home buyers, but you can get into a home for a subsidized rate, but it's actually, there are programs in Massachusetts like this anyways, that it's actually attached to the deed. Mm-hmm. It's actually attached to, there's an addendum, an attachment to the deed that actually puts, there's a clause that says, if this property is sold, this is what's going to happen. You're going to have to pay that money back. So it's, I think that the best chance you can get is, and the way to the path to get by this is to Jackie and I did a video, a live stream about this, is to find an assumable loan. Find a seller with an assumable loan at a low rate. If you have, and it's like a needle in a haystack, but if you can find a property that you're looking for, mm-hmm. that in your area, mm-hmm. and there are, like I have in the description, there's a couple links to assume. Oh gosh, I forget the name of the website. It's Assume List or something of that nature. It's a list of basically all those assumable properties across the country. Doesn't include every county, but you and it does require a lot of legwork for your buyer agent to dig into it to see what type of mortgage they have, to find out if it is assumable, find out what the rate is, right? But mm-hmm. I mean, there's not a lot of inventory. So I mean, if you have the motivation, you have the tenacity to dig at it and get after it, it is possible potentially to find a home and get a 2.75% interest rate or 3% interest rate, assuming the balance of that, which is, when you do an assumable loan, you are required to pay, if you're buying a $500,000 house and the assumable loan only has 27 years left on it, 26 years left on it, and the balance is $225,000, well, then you've got to make up that difference, or $250,000, and the house price is $500,000, you've got to make up that $250,000 difference. And if you're selling a property that has equity, that's an option. Mm-hmm. And the other option is, if you can't make up the difference in, from, sale of a property, and, you can't make up the entire difference, you could take out a mortgage to fill the gap. So you might pay a
mortgage. Right.
Oh, it's a higher rate. It's a higher rate mortgage. It's more of a conventional rate mortgage. So but you're going to be paying, say you take a $100,000 loan,
Yeah.
to fill that gap. That $100,000 at whatever that rate is, 6.2%, right? It's only 100,000. The
Mhm.
250,000 is going to be at the lower rate. So you do save
Exactly.
money.
Quite
But
a bit.
it's work. It's not easy. You got to make sure you have a buyer agent that's astute in being able to find those and helping you negotiate those, because I will tell you right now, listing agents will look at you like a deer in the headlights if you ask them, is the mortgage assumable and what's the rate? They're gonna be like, wait, what?
And they also, from what I heard and I understand, that the actual assumption process can take quite a bit of time. So people
It
need to
does
be
take
prepared
longer.
for
There's
that.
more paperwork. There's a lot more paperwork because, which stands to reason, because you still have to qualify for the loan,
Exactly.
right? You still have to qualify for the loan, just like you would any loan. It's not just signing the dotted line. So you've got to go through that whole approval process.
Hmm.
Uh, so it is a little bit more legwork, but it all boils down to, how much do you want it?
Exactly.
What's your pain point? How much do you want it? Clark says, I tell people, if you're looking for affordability and willing to put the sweat equity in and take home buyer courses, put your name on the list for Habitat for Humanity. Yes, of course, everyone won't qualify. That's a great point, for sure. I mean, um, I've had situations where clients have won lotteries. They do lotteries here and for Habitat for Humanity homes, and I've had clients win that lottery, um, and then they just buy it directly from the Habitat for Humanity, and they get super low price and all the things, and it's a wonderful situation.
I actually work with Habitat in New Jersey and in PA, actually on both sides. I'm part of
For
their
you.
buyer education committee. And I can tell you that their focus is on affordable homes. Affordable homes, they have moderate uh, income qualifications, and then they have also low income qualifications to help those become homeowners. And I really applaud them because that's their focus. They actually have a deed restriction for a lot of these homes to make sure that if they were to ever go and sell, it's still going to be under that mandate. So
Yep,
that's their focus, and I love it.
absolutely. That's a great. It's a pretty awesome organization.
Mhm.
It's an organization that is um it needs more funding. It
Yes.
needs more. I mean, because they have to have properties donated to them.
Hmm.
They have to have land donated to them, and then they get right. This, and then they have all the supplies donated to them, and or at a fraction of a cost. Um, and the people that run the committees, it's all volunteer. Majority of it's volunteer, and it's a pretty unbelievable organization. But so thank you for doing that. I appreciate it.
Yeah.
Clark says Habitat for Humanity has a home buyer program for citizens making under a certain amount according to the AMI in that was it AMI average average median income in that
Mm.
location. Yes. So check. You can go if you are interested. You go on the Habitat for Humanity website, and they will, for your particular area, and they will have the income requirements to see if you qualify.
They
So
also have programs to help people renovate homes if you are
they
under
do.
the
Yes.
limit. And they also have great programs for veterans.
Hmm. Yeah, they actually do. In my area, anyways, they have. There are homes that uh, are veteran homes.
Hmm.
They just it's specifically for vets,
Hmm.
um, which is pretty cool. And a lot of them are coming right out of the VA hospital. They have special needs, ramps and wider doors or whatever, and they accommodate all that. So hey, Smash the World, hello from Arizona.
Hello,
What's the
hello.
what's the temperature down in Arizona? Bet you it's a lot warmer than it is up here. It's 50
Probably.
degrees. 51 degrees right now in Massachusetts.
But you know what? This morning for us it was 48, so we are on the same wavelength.
Yeah, I don't mind it though. I
Yeah,
actually am still sleeping with the window open at night, so
yeah, for
I love the
sure.
cool
For
air.
sure. You know what,
Um,
too? I think people are. This is what we were talking about early today, and I had was talking to a home seller, and we had to reduce the price because they are actually relocating because they're a military family. And the two words that stood out to me when we were talking about it, it was jitters and slow, in terms of the type of market that we're in. Jitters and small and slow. And this is what I tell a lot of people, because buying, home selling, all of it is so emotional. And we totally understand that. And we're there, we help them and we guide them. And I tell people that every home has a price, every home has a buyer. And sometimes you just have to put aside what you see that's happening on the national level, because there's always going to be something that is cooking, right? There's always going to be something, some kind of doom and gloom news. And I always tell people, let's focus on you. What are you looking for? What do you need?
Yep.
What is important to you?
Yeah. That's very wise. We're very wise words, for sure, because that's what it basically comes down to. What is the best for you and your family?
Yes.
Well, I will say that if anyone is looking for, if they're looking for some help down in Jersey, Pennsylvania for their family, check out Olga.
That's me, everybody.
That's it. There you go. Check out Olga, and her channel is pretty awesome. She has a lot of great retirement information,
Right.
but also, by all means, if you need some help in down the Jersey, Pennsylvania area, look her up. And if you need, of course, if you need a referral for outside that area, you can click the link down below. I'll set you up with a 20% agent. As I always talk about in this channel, that I'm a firm believer that 80% of the agents in our industry are not worth the penny that they make. They're not worth the money 100%. They make. They're not extremely skilled, and they very often do not have your best interest at heart. But the 20% agents, the 20% of the agents that are out there do. And there are some really, really, really great agents that will save you money when you sell, will save you money and headache when you buy. And but it's sometimes hard to find those agents, because it's like finding a needle in a haystack. So fill out the link. I'm going to do a quick shameless plug for the and I do. If you want some laugh and some giggles, we do a podcast. Rather, we do a podcast called the Reddit Real Estate Disasters. You can watch it on the tubes, or you can go on any of the podcast networks and check that out. That's just a fun project that we do about kind of reading stories from Reddit that are just honestly kind of ridiculous.
I bet you that's a never ending, isn't it? You can probably keep doing it and doing it and doing it. And
people love to air their dirty laundry. That's what I like to say. And it's like, I should just drop the therapist and just go on Reddit, because 100%. That's what everybody does. And I also wanted to let you guys know that I officially am, I started uploading all of these live streams on podcasts. So if you would prefer, if it's easier for you to listen to the live stream on through a podcast channel, you can check out all the and actually uploading all past episodes. So all the episodes will be uploaded and updated shortly. You can see I'm up to 11. I've got last week's, but I've got a few to still update. But those are coming every week. Those will be updated to the podcast channel. So, and then once again, make sure you check out the United Cajun Army if you're interested in making a donation to support their great cause, or going on the Amazon wish list to help them out. It is an absolute terrific organization to help our friends down south. So that's all she wrote. Thank you, everybody, for joining us. Olga, thanks so much for joining in. Super, super great conversation, and fun having a good Halloween scary conversation.
Well, we have a couple more weeks of that, so let's keep it going.
I love October. It's a fun month. So, hey, everybody, thanks so much for hanging out for this time. Thank you for spending your precious time with us. I appreciate it. You guys all have a great week. Be kind to each other. It's a very, very crazy time out there. People are a little on edge for multiple reasons. So let's just be kind and seek to understand. Let's not jump to conclusions, and have patience for everyone, because everybody's going through something. So Have a great week, everybody. Thanks so much, Olga. We'll see you guys next
Absolutely.
Tuesday.
Jim. Bye-bye, everybody. You know what? Technology is going to get to that point where it's actually